Welcome back, everyone. This is Jake from Crestview and Magnuson. Welcome back to the Crestview and Magnuson presentation room here in the Metaverse for our third episode of Macro in the Metaverse, hosted by myself. Again, my name is Jake with Crestview and Magnuson. Today, we're going to talk a little bit about the ES, S&P 500, what I think it's going to be doing over the next coming weeks, as well as some crypto stuff, some potential trade opportunities, and overall, where I think the market's headed in the mid to long term. So without further ado, let's get right in. All right, everyone. Here we are at the charts. Going to start off taking a look at the S&P 500 E-mini futures. Again, if this is your first episode, I like to use the S&P 500 as a gauge for the overall market and base my biases and tendencies off of. So here, this is the standard chart that I use, or I've been using for the last couple of months. Clearly labeled 2021 range low and range high. This macro range that we're looking at, again, this is the weekly chart. So this is the higher time frame perspective of smaller moves in between. And this is where we begin to start looking to position ourselves for longer terms within the market. So it looks like still capped, obviously the high of 2021 and the low of 2021, or the open of 2021, 3,600. Right now, today's currently Saturday, so futures and equity markets are not open. But Friday closed at 4,075. And I believe in one of our prior episodes, I predicted a push up, and that is something that we got. No trades were taken, however. My overall perspective of this market is long-term bearish. So I will be hedging and protecting my capital on the way up, and then sizing in at higher levels. Just because I think with the global macro picture, we are overall bearish for the long term. And by long term, probably next year and a half. So the higher probability positions or setups in my mind are going to be to the downside. So get on this weekly. This past week, past 2 weeks, we've had two pretty large green candles. 3% in 2 weeks. Nothing to kick yourself in the butt about if you're short. But again, risk is to the upside. Liquidity is leaving the markets extremely fast. So moves are going to be hard and fast in both directions. I think one day this week, that might have been Thursday, there were some Fed minutes. Market was up, 4% in one day. So any short position would have got crushed by that. It kind of just proves the illiquidity of these markets and how treacherous they can be if you're over leveraged to one side. So let's drop down to a smaller time frame. I've got to, here we go. Nope, not here. Drop down to the daily time frame and identify some key points in the market. All right, so now that we are looking at the daily chart here, we've got some key areas to watch out for. To the upside, the first one is this red box here. I label my supply zones in red and my demand zones in green. So there are lots of sellers between this 4150 and 4200 level. Looking back to this area right here, the last up move before the down move that broke market structure. Took out these lows here with this move all the way down. And then actually we caught a bid right back into the supply zone. So that is one of the confluent indicators as to why I believe that this zone is valid. However, we'll have to see what happens in the near future, the next time price retraces to this level, which I believe will happen. probably in the next week, maybe 2 weeks. If we get a little choppy, maybe FOMC pushes us higher, but that's just my bias. Okay. We've got the supply zone at 4150 to 4200, kind of confluent with this macro mid-range at 4230 with a dashed red line. And we have a demand zone down at 38.25, call it. So this is kind of the range that we've been capped in since the middle of November, basically. Kind of trading within supply and demand. So kind of been chop. A couple days ago, again, we had that 3% green day. But aside from that, the moves haven't really been there. You can see these outlier moves. Look at the 10th of November, 5%. And then the 30th, another 3% move. That's what I mean with the lack of liquidity, allowing these markets to just ferociously rip in either direction. And, just because of the nature of the bear market that we're in, those moves happen to be to the upside just because, there's a lot of people shorting from high, a little bit early, you can call it. And then, the market just comes to take souls. So taking the souls of the bears on this long grind up. We had this little gray area marked out as a potential area to retest or to watch out for in the future. And we marked that out, man, I want to say it was in the first episode. And it kind of acted as a resistance area at the end of the week. So we'll see what happens from there. Let's see how price reacts. We've also got this swing high from the 28th of November, 40.50. That is a key level for the bulls. If price breaks underneath that level and holds, probably see some price action to the downside, maybe cleaning out these lows here at 39.50 and possibly retesting this SR here. We got a nice kiss of the SR on November 17th. So those are some of the key levels and areas that I'm looking out for, especially on the daily time frame. We can drop it down just to take a look. Let's go to the hourly. So what I see on the hourly, we had this huge impulsive move above 40.80, clearing out the highs from the sellers last week around Thanksgiving. They were making good money up until Thursday, and then Thursday comes, they all get wiped. Clean couple retests of this resistance area at 4100, 4090, 4100. Little sell off at the end of the day, and then a rally. But you see how this 40.50 area acts as a key level to hold. We got this massive breakdown right here. Call it Friday morning, actually. Broke below, wiped out all the stops resting in here, killed it, and then reclaim above it and close the day above it. So that kind of gives some more confluence as to the importance of that area. I know I've said confluence a lot, but a lot of the things that I look at have to work in conjunction with another. So confluence from many indicators gives me the best idea of where I think the market's going to go and when and why. So again, big picture, I'm bearish. But as long as we can hold this 40.50 level, I think that the bulls are handling this market relatively well. And you can look for entries, possibly, we could probably expect a retracement. We got a little one, but, maybe there's some inefficiency still within this leg, possibly liking this area down here as a potential retest of demand. And I think if we got some price action down there, that would be a extremely tempting order from the level from a buy order side. You're getting a higher probability trade if you think the market's going to continue to rally, and you're getting your entry at a lower price. So that could be it. That could be one thing you're looking out for. One more. One thing that I also liked about this pullback that kind of gives me a feeling that we still go higher before we go lower is, let me just get my tools here. So on the 1 hour, we had this gap here, what you might call a fair value gap in this area here. Not much trading happened. You can just see the massive bullish market structure. This is an hourly fair value gap. So, we got a retracement to fill this gap completely. And then the buyers started to continue hammering it home that we're still going higher. So the fact that this gap was filled, almost immediately, and it wasn't left for a future date, again, another indicator as to my bias in this market going higher. That's kind of my thoughts now. Waiting for some retests of these big picture areas like the supply zone up here, and then even potentially an over-under of this macro mid-range, maybe to kill some of the early shorters from back in, I want to say July or June, last time we were up this high. But again, one thing that I want to mention is that anything can happen in this type of market. Bear markets statistically are the hardest to trade, historically proven. And they can be brutal. Another potential thing to note is that, we Americans have seen not a recession, a depression almost every 100 years. Not saying that this is going to be that, but, the Great Depression of the late 20s, not saying it's going to be as bad. Market conditions are a little bit different. The economy is a little bit healthier, American one in specific. But I think that we're going to ultimately, create some new lows, somewhere down in here. Do I have a time frame? Probably mid to late next year. But my whole goal is not to miss the next stage of this bear market where, we really do see this downward pressure that's been building up for months, finally capitulate the buyers, and they don't even want to step in at all. And then, once we get to the bottom, we will buy everything at the lows, and 20 years later we might have to consider repositioning. But again, recessions are followed by bull markets. So as long as you're not risking too much of your capital, I think that you should be in a good spot, picking your battles wisely. Maybe you're not an intraday trader. Maybe you're a swing position trader, kind of like what we're doing in this current market. You just got to pick your battles wisely, take the high probability setups, and let your knowledge, your research, your skills take over and put yourself in a great spot to succeed in the markets. Lastly, I guess, is these highs from August, something that's not out of the question. Maybe you see something like this, hold here, pierce supply, get a rejection, maybe clean out some lows on that first leg, and then you get something like this. We rally a little bit higher, potentially clear out some stops, some early shorters again. And who knows? That might be the last leg up before we see, a larger sell-off in the overall markets. So anything can happen, and you can't really rule anything out. So this is how I'm preparing for all of these situations. I think that we covered a decent bit on the ES. I kind of want to cover a little Bitcoin chart to gauge the crypto market really quick. Bear with me. Alrighty. So let's take a look at the weekly, see what's going on. Let me delete some of this nonsense that I've got here. I was brainstorming trade ideas with a buddy the other night, and I've got some positions marked out on here. But yeah, like we've said in the past on Bitcoin, like we said in the past on Bitcoin, this is a super, super ugly chart. If it were any asset, you'd think the same thing. You wouldn't want to touch it. But again, there's opportunities to be had and money to be made, even in a bear market. We've had significant legs down since the end of 2021. And the overall sentiment is risk off. So, Bitcoin is one of the highest beta assets, one of the highest volatility assets out there, if you consider it one. Markets are still going to be moved, and there's manipulation that happens. So be it, whatever you want to call it. So I kind of want to just take a look at where we're at. We're still sitting around this $17,000 mark, trading within this daily range here. The swing high of 18.2 and the swing low of 15.6. And we did just actually break the mid-range at about 16.9. And that's something to keep in mind. We've began trading in the upper half of this range here. So that, along with some other indicators in the lower time frames, it happens to manipulate or change my bias, being, maybe we're going to see higher up before we go lower. Again, if I think that that's going to happen with the stock market, why would it not happen with crypto? They tend to move similarly in both directions, with Bitcoin actually moving more in both directions. I thought the key level for Bitcoin on the 4-hour time frame was this swing high here at 16.5. Got a sell off from there, fill in some of this gap over here, and then move up. And now we've broken, retested, and so far we're holding the mid range at 16.9. So I personally would rather be a buyer than a seller at the current levels in Bitcoin, and with the current market sentiment that I hold. Long bias here has the higher probability of success. So I guess one potential conservative entry that you might be able to pull from here is that maybe you think that we're not going to dip below 16.9, this mid level, or maybe you don't think we're going to get below this low right here at 16.7 or 16.8. So maybe you want to enter now, risk below maybe this stop here, maybe these from over here, and target the range highs. It's not necessarily the largest move. However, you're getting great risk to reward. You're getting almost 6-1 from this sort of setup. So again, it's really important to manage risk, and no matter what type of trader you are, intraday, scalper, long-term, position trader, um, these are things you got to keep in mind being a trader in any market. But pretty much from some of the ideas that I had last night talking on the phone with a buddy was possibly a sell-off over the weekend, or some flat trading over the weekend, and then maybe a dip deviation of the previous SR level. As we said, it acted as resistance here. Some of these highs blast right through it, no retest, a little bit of inefficient price action in this range. So maybe I thought some of that inefficient price action would get filled, some orders would get filled before we ultimately make our way higher into the top of the range. And again, if the stock market you think is going to go up, which I do in the short term, why wouldn't Bitcoin? They do move somewhat similarly. So that's kind of the thought process here with Bitcoin. Again, the trading, it's not in this type of market. You don't want to overtrade because, again, you see this price action, and I mean it's just all chop, chop, chop. And this is a 4-hour chart, and even here, this is over a week's worth of chop. And one piece of news happens, market sells off. Another thing happens, price pumps. So I don't think it's necessarily a good thing to try to catch all of these moves. But again, there's opportunity to be made in all markets, in all conditions. So, that's something else to keep in mind. I think that if we see a reclaim, underside retest of, the 16.6 level, maybe we get an expansion downward from this chop range. I think that that's not good for Bitcoin. I'll just put it that way. If we get under here, retest, you're probably going to look for a distribution range before another sell-off, and ultimately attacking these lows here down at 15.5. And who's to say we don't go lower to our lower targets, 11, 12, 13, 14K. So until we get some sort of confirmation to either direction, my best bet is to stay on the sideline, unless you're long biased like me and you want to take a conservative trade, which I mentioned earlier, playing the mid-range to the range high. That's something else you can do. Maybe have a wider stop, a little bit less risk to reward, but something that you're comfortable with to ultimately catch the bigger picture move. So yeah, that is Bitcoin in a nutshell. Maybe we take a look at some alts. I know we haven't done that before, so let's take a look. Ethereum, one of the other nice ones that it's going to be around here for a while. Again, similar price action to Bitcoin, since the end of 2021. Massive pushes upward, followed by continuous selling. I think it's had a couple harder rallies in terms of percentages than Bitcoin, but again, the market cap's way lower, so moves are going to be even more volatile than with Bitcoin. But again, like I said with BTC, macro range, we've got the swing low in June, just under 900, swing high just above 2,000 from August, and we've just continually been trading within this range. More specifically, we're capped to the upside. We've got a 3-day supply zone here at around 1860. And we've got a weekly demand zone here, last down candle before the up move that broke some structure at, call it 1200, between 1,000 and 1,200. I've also noted the 2021 yearly open as it has never been closed below before. Only wicks have tapped it or, gone back above. But I like to incorporate, multiple different types of trading styles into my own guide. Again, like I learned some of this range trading stuff from some really good traders that I have seen their content on social media and I've watched their live streams. There's some really beneficial sources out there for people that want to get into trading or learn how to take their trading to the next level. Um, and this range stuff really does play out well. And then again, the research and study that I've done on supply and demand, it served me well. You can see, here in end of September, October, this demand zone was quickly bought up above the mid range, and we got this deviation sell off back into demand, and now we're starting to see some more buying pressure come. And again, just like the S&P 500 and Bitcoin, if we think that they're going to go up in the short term, why wouldn't Ethereum? So I guess some of my levels that I'm looking at are some of these highs here at like 1650. And then ultimately, if we see 1800 again, get a nice little rally into the supply zone before we can position ourselves for the ultimate final leg down, which will probably come, I'd say, beginning middle of 2023. I'd probably say the bottom comes similarly to when the stock market bottoms. So, yeah, just mitigating risk, hedging, sizing yourself correctly to where you're not losing all your capital, because the number one rule of trading is capital preservation comes before capital growth. And if you preserve your capital, the returns are going to follow. In the wise words of Wifey Alpha on Twitter. By the way, you should check him out. He puts a lot of information out there for free, institutional grade stuff. So feel free to check him out if you get a shot. And speaking of social media, feel free to follow Crestview and Magnuson on all platforms, and even give us a follow on YouTube so you can share our YouTube videos with your friends and your family and whatnot. Hopefully, I can provide you guys with a little bit of knowledge and give a little insight into the bigger picture of the markets, potentially some trade setups that I'm looking for in the near term. Without further ado, I think we're going to cut it off there. Again, this is Jake with Crestview Magnuson presenting to you guys from the Crestview Magnuson presentation room in the Metaverse. Thank you all for stopping by for the third episode of our macro in the Metaverse. Again, like, follow, subscribe, share, comment any questions that you have in the description, or reach out to me directly and try to get those answered. That's kind of the next phase that I want to get into. Getting some feedback from the audience. Maybe you want me to go over some charts, crypto equities, indices, all types of assets. So feel free to reach out to me and I'll get some charts put together. Without further ado, that is the end of the episode. Thank you guys for watching, and we'll see you guys soon.